Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors.
Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. Hey, I want to get into the second quarter earnings season, which is about to kick off, and really talk about it from the perspective of our second half outlook, what's going on in the environment, kind of context in terms of the markets and what we see unfolding. And, I'd say what's been interesting up until at least a few days ago is we've seen stretched valuations, right? Equity markets resilient, continuing, and that's anchored to a very good degree in optimism about earnings. And so the data, like what people are expecting, that's all pretty important. The timing of releases, that'll be a little bit important. And while we've seen the market just continue higher, the way we've been talking about it is in the second half, we're anticipating a decent return for the full year. And we set this target for the S&P 500 at the beginning of the year, 7,450 to end the year there. And the market's been trading around that level, right? So people have said, well, should you update your target, make it higher? And our response to that has been, maybe not, because we've got these issues that just may have us range bound. It's not that we're overly worried about the market, but we're not necessarily in the camp that everything's just going to stay perfect. And so let's get into that a little bit. And then, of course, I'll wrap with a few comments on the Middle East because there's been some shifts there. Anyway, when we get into the earnings, essentially, think double-digit growth, strong double-digit growth for the second quarter year over year. And so when you roll up all the analysts doing all the work on S&P 500 companies, the earnings growth is forecast to be over 23%. And that's the second straight quarter above 20%, based at least on the FactSet calculations. And then the seventh straight double-digit growth quarter, which is really quite striking. The earnings have been growing and growing and growing, which is great. I would say analysts, one of the other things people watch is how do the analysts change their views? And over the quarter, so from the end of March to the end of June, those estimates went up 3.4%, when usually what happens is they're optimistic at the beginning. As we make our way through the quarter, the average pattern is for that to go down just a little bit. And so I'll sort of think of it as a lot of optimism baked in. Another thing that we look at carefully is a company guidance. So what are companies saying? And there's a little bit of a positive skew there as well. 63% of the companies issued positive forward guidance versus 48 negative. And so think of it as for those issuing guidance, it leans positive when historically it tends to lean negative. And so, and by the way, 44 of those companies issuing positive guidance are in the tech sector. So there's just a lot of optimism built in. Now, this is off a foundation of revenue, right? You can't have earnings without revenue. And while those growth rates, because it's sort of unleveraged is the way to think about it, those are lower, but still positive, and historically pretty good. And so the revenue growth is expected to be at about 12%, which is a good number. And it's, in fact, the fastest since 2022. Now, that's all a bunch of optimism that's baked in. And what sometimes happens is as the earnings season unfolds, and companies, it's like when there's a lot of optimism, anybody misses a little bit and that stock and or the market can kind of react negatively. It's almost like too much optimism built in to both the forecasts and the valuations, and it creates a little bit of a hypersensitivity to downward movement. And again, we're not sitting here saying, hey, we're headed for a bear market, but what we're saying is we've seen a lot of people sort of reissue their price targets higher. That may happen. I kind of think of it as maybe 50-50, but the reality is, given just almost like the emotion of the market, if we see some cracks, then the market's going to be volatile and potentially a little bit negative. In any event, when it comes to that pattern of releases, there's sort of a known sequencing that occurs. So, for example, relatively early, so think mid-July, you get the big financials. So think big banks, Wells Fargo, JP Morgan, Citigroup, Goldman, Morgan Stanley, Bank of America. So that's watched carefully, number one, to set the tone. But then also, interestingly, of course, those companies, when they talk about their earnings, they get into some of the underlying situations with the economy. So they're going to talk about the credit environment. They're going to talk about, quite notably, the consumer and what they're seeing with the consumer, which, of course, the consumer is a huge driver of the economy. So to the degree we see even those second-order cracks, credit issues or consumer slowdown, those are things that people pick up on in these earnings, and that will create some movement in the market. Now, it's unrelated to finance, but coincidentally, around that time, Netflix reports, and that's another consumer metric, right? So you can look at what's going on with Netflix and see whether the consumer is sort of leaning into purchasing stuff or not. Obviously, the big topic in the market the last few years has been artificial intelligence. The optimism is baked in there. We've seen, a lot going on with chips and supply chain and all this. And so, for example, mid-July as well, we're going to see Taiwan Semiconductor and ASML. Those are both sort of bellwethers as it relates to AI and what the patterns are there. But then a little bit later, we see kind of the big tech companies. So this is late July, early August. You're going to see Microsoft, Alphabet, Meta, and Amazon, Apple, and then sort of in the Mag 7, Tesla. And essentially, again, same thing, right? And on one hand, you look at the pattern of those companies, what their earnings are, whether they're hitting, beating, quite slightly missing their numbers based on those forecasts. But also, you learn about what's going on in terms of this build out of infrastructure. So cloud growth, capital spending, all of this gets sort of communicated by the big companies. And, there's been this undercurrent when it comes to the CapEx, which is, hey, okay, we're excited to invest in fun things and exciting things, but when are we going to see a return on that investment? So the way you learn about that is when they report their earnings, how they talk about what investments they've made and what earnings they've accomplished as a result. And it takes time. It sort of comes out over time, but super important. Now, of course, NVIDIA has been another super bellwether. Everybody watches it very carefully. It's been wild how much it's beat, and it's sort of like the power of that company in terms of growth. And so just coincidentally, that's on the later side of the calendar. So you can almost think of it as the emotion unfolds, is you get the financials, you get the big tech companies, people are kind of trying to take stock, no pun intended, on what's going on. And then late in the cycle, and this time around, I think it's lightly scheduled for around August 26, maybe definitively so. But around that date, NVIDIA is going to report, and that will sort of create a wave of impressions and interpretations, right? What's going on with their business? Where is it growing? Is it growing as much as people think? What does that tell us about the AI trade, et cetera? Now, the other thing, just to maybe close out on the earnings, is energy results will be done, I think, later in the cycle as well. So energy companies, and if you think about that price of oil, they've actually had increased revenue. Then it's backed off, the potential for backing off with the concept of peace. But it does allow us to turn to the Middle East and talk quickly about that. The punchline is we had this sort of peace pre-agreement, kind of a memorandum of understanding, where the U.S. and Iran were making their way through negotiations to get to a place of peace. Then during a little pause, which I thought was a little suspect, but essentially Iran attacked some ships in the Strait of Hormuz, and then Trump comes out and says, okay, the peace deal is off, and we're now 2 days into another wave of attacks. And so things are reheating quite significantly, actually. Now, our view continues to be managed off-ramp, that we'll get back to a discussion about peace, but this is going to be a big disruption to that. And, it may mean we're wrong about that view. But ultimately, I think what tends to happen is with these patterns is the U.S. will come and hit them hard, and there will be a point of almost like capitulation. They'll go back to the table, hopefully, and we'll see things unfold. But I mentioned it in part during this session, number one, for an update, but number two, really, to point out, markets have been nicely priced. A lot of optimism about things like peace, things like great earnings baked into the market levels, when you have these cracks, like all of a sudden pieces off the table again, we see a downturn, we're seeing oil prices move back higher. That means the Fed's going to stay super focused on inflation. That means rates are going to stay higher. These are all things that could create cracks in the equity market and see us experience some volatility for sure, but potentially some downward movement. So take maybe sort of finishing up where we started. A lot of people have sort of asked, how are you revising your year-end target? We decided not to do that within the wealth division here at Stifel. And it's, again, I don't mean to say that market can't go higher. And again, I kind of put it at 50-50 at this point, but not so much conviction that we're ready to formally, which we don't always do anyway, but formally put a new target on the table. We'll certainly create an outlook for 2027 when the end of the year comes around. So listen, really appreciate you taking the time to listen to our series and to this episode. Hopefully it was helpful. And, we'll look forward to giving you an update in about a week. Thanks so much.
Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.